Hey guys, welcome to Crypto Trends. This is the one-day blue chip Heikin-Ashi candle technical analysis of the trend. I'm Silverback, and thanks for joining. And just for if you are new, I like to just every now and again circle back. Sorry if you've heard this a million times, but essentially what I do is look at the top 20 large cap cryptos that are listed on Apex Pro, which is a decentralized derivative exchange or DEX. That's done by Bybit, yeah, I'm basically just going in and learning it myself, and then just doing videos as a bit of a journal, so I've got a reference as to what I'm doing, yeah, like just looking at a starting balance, and then basically trying to do. It is a leverage exchange, but I'm trying to do like a 1x, so there's no leverage involved. To give people a chance to get some experience, and myself some experience up on how to navigate the exchange, and basically how to operate it, how to set a stop loss, and all the basic stuff that most tutorials don't really go into a lot of detail. So hopefully this sort of format is going to be sort of helpful to some people. And yeah, so full disclosure, I am an affiliate for Apex Pro. And it sort of helps me sort of, I'll pay for my trading view and stuff like that, and a few of the expenses to keep all the lights on and stuff like that, so it's appreciated. There is a Substack a subscription that also that's my subscribers support my time and efforts to bring these videos to you, and also keep us ad free. But that said, and out the way, I wanted to start off with how we actually look at the markets, and what sort of normal candles basically look like this. The way that we approach it is obviously we go through one at a time. Actually, the market's starting to pump, so look, I'll stop talking. I'll start moving faster. I might do the technical analysis first, and then I'll go through exactly how what the methodology is, and also what indicator we use, so you can actually just replicate this yourself. So it's just as much about education. I'm not trying to hold back information. So like starting with BTC. Well, it's already 1.29% up after the new day started a few minutes ago. So we have an existing short from the 9th of Jan, and obviously that got broken. We had a stop loss set down here at 94,975. It did get broken by yesterday's closed candle. This is today's candle. It looks like it wants to try and get up. This is incomplete information. There's only like 41 minutes worth of data in there, so just ignore that. You can't use that for it's the second last candle on all these charts, because I'm using Heikin-Ashi. Supposed to be, sorry. Heikin-Ashi, yeah. So that basically you can see it straight away. It irons out all the what do you call it? Speckly, red, green. Instead of doing that, it just shows you the total trend. That's the first key. Is we try and mask volatility and try and attach onto trend. The second thing, I said I wasn't going to do this, but I'm doing it now anyway. But the indicator here is basically, if you go into, I'll show you where it is. Go into indicators, go down to find smooth Heikin-Ashi candles with delayed signals, and then you basically just you go in there, you select that, add it to your chart, and then if you want to do, you can actually come in here. You can have the actual indicators on the chart, which kind of look like if I just change the line chart so you can see. It kind of looks like that. You can change the actual EMA length, so you can basically just go like a fast is 5. You can see how it actually just gives you a smooth, just in and out, and then it just gives you a buy and a sell. So say for example in this scenario, you would have bought on this candle here, the price was up there. It would have gotten you out on this one, but you would have got an indicator here, and so basically over 44 days you would have made 28%. I mean, this is cherry picked, but still, you can see how volatile the price is. Most people, they'll FOMO or they'll sell too early. So this is a method of masking all this volatility and just sticking with the trend. And that's basically what my large focus is about on this channel. I basically, the trend is your friend until the end of the trend is my catchphrase. It's not mine, but I've used it. Anyway, so let's have a look and see how that would have performed. 28.04 divided by 44 days. So that would be 0.63% per day over that period, and the volatility was all over the place. Like, in fact, some parts of it were certainly going down. Over here was going down. Over here was going down. Big drops, you know, big roller coaster oohs and ahs. And now if I times that by 365, you got 232% annualized. That's without any compounding, right? So that gives you some sort of frame as to what we do. And now, what I do is I actually, just to say, so you know what settings I'm using very, very, very fast reactions. So because we are in a 1 day time frame, I want it to really hug the price. You see how that hugs it a lot more. And then furthermore from there, I don't need to see the trend, because I just need to see the indicators. So I just go in here and I just go tick the hike and smooth to just turn that off, and then I can basically use any sort of candles I want, and then I just got the indicators left over behind as a residual, just to give me that data that I need. So I can basically go, all right, go short here, go long here, but pretty much you don't want to pretty much argue with it. However, there is one other nuance which I'll touch on, and that is to work out where your stop loss levels are. There's something within Heikin-Ashi. So I changed my candles to Heikin-Ashi. So this is the way I would trade. What is this? So that's just like this extra stuff here's on my charts. Get off. I just don't need it. Don't use it, so don't need it. There you go. Just clean it up a bit. Sorry, just so for your guys' benefit. So let's say, okay, so we've got let's say we put we got a green candle there, and this is what you'll find. So we've got a green candle there. That's all we know. It's been red. We've got a green. We haven't got a buy signal, but I would actually go in and put a position there on that day. So I'd put a buy there, and then I just follow it up. It came through with a confirmation buy as well. So if you wanted to wait until you got some confirmation from the indicator, you could do that as well. Basically, I mean, it got you know, the difference between there and there is hardly anything. So it's like 2.75% difference on a massive move, as we'll end up seeing. Now, this thing I'm talking about with Heikin-Ashi and setting stop loss levels, the way it works is this is done on a monthly time frame. For investors use this, like large investors, right? They use a monthly scale, and they basically look at the bottom of these Heikin-Ashi candles. If there's no wick at the bottom, that means there's no price indecision, you know, driving force to come down through the bottom of these candles. The wicks will be up the top if it's going in that direction. So, but more so, the absence of the lower wicks means that you can sort of leave your stop loss down here, and you can let it run a bit. You know, have a bit of volatility, and then you can still ignore it. Okay, so it'll allow you to actually ignore it. So I'm going to keep on going until I see a bottom wick below one of these candles. So there you go. There's a wick. Alright, so what I would do without knowing any future information, I would then be on the video here telling you, okay, this is the daily report, you know, I'm saying move your stop up to there, and you lock in the where are we? 20% profits, and then we'll see how we go. Next one, we've got another wick, and it's a green one. We'll still stay in, but we'll move our stop loss. It's very hard to get onto this. Move our stop loss one closer, and then we go to the next candle. We've got another green one, and a wick at the bottom, so I'd move the stop loss up to there. And see what's going. Oh, another green one. So we're still staying in. Let's move that stop loss up to there. You can see what's happening is basically because I've set my smooth Heikin-Ashi, we're going to get this pretty early indicator. We'll probably get a reasonably early indicator when things start to turn to shit as well, to come down. You'd be very happy seeing this day after day, wouldn't you? Oh, there you go. There's another wick down the bottom. Oops. Onto there. Okay, now, so because we said our wick level was there, we actually got a candle that did actually stop us out. So if you're inside the Apex Pro exchange, that would have actually stopped you out. So let's see what happens. We're out of the trade. We've got USD now. You can sort of see that, you know, we captured everything from all the way down here, all the way up to that point there. So that's 39% in 20 days. So actually, that's not a bad clip. So let's just work it out for the numbers, people. 39.07 divided by 26. Oh no, not 26. 20. That's 1.95% per day. Times that by 365. Now this is without compounding now. This is APR, not APY. 700% per annum. Now you're not going to get these trades all the time, but you are going to get them. You're going to get them with following this principle. You're going to be annoyed. These periods here are going to annoy the crap out of you, and that's the work. That's the work part of it. Where it's not, you're not waking up every day and it's like, yes, you know. But you go through these periods of time, and you know, if you can stop yourself from losing money, right, and you just continuously keep on just inching up, you'll have these periods of time where you make substantial amounts of money. And if your account's not going backwards, it's going forwards, and you're consistently profitable over time, you can allow it to grow. And then when you go through these periods, like, you're making like, you know, 7x your bags during like a bull market like this. And don't forget, with Apex Pro, when we're in the bear market, we're gonna have markets to go down as well. We'll be making money on the way down as well, and we can take it out in USD, and we can go buy whatever crypto or whatever asset. You can buy fractional ownership of Mona Lisa. Okay, all right, slowing back down, getting back into the charts. I was going on a bit of a rant there. Anyway, what I left it, so fractional ownership of the Mona Lisa. Yeah, okay, whatever. You just do you. We'll try and get profitable first, one step at a time. So let's go through the charts. So BTC, it's in the red. We do have a current active short. We've got a little bit of a bounce happening today, but the complete closed candle is this one we look at here. And that is still in the red, and it actually has come up from a short and stopped us out at 94.975. I did actually have a little short on there that did get stopped out, but so I'm out of that trade. Active short from the 8th of Jan. If you had your stop loss set up at 3,300, like I advised, you would have got stopped out of that one. Looks like that's waking up a little bit by the looks of it. So that's still currently short and stopped out. AVAX, the indicator has a current short at from the 9th of Jan. We're just trailing that down. If you still have a current short on that from back then basically you were just moving these down onto these top wicks as the red candles form. And your stop loss there going back is $37.61. You can read it on the screen. It's always in the blue writing and next to the blue line. So I like to keep it sort of like standard and same all the way through. Pepe is this is a bit of a funny one. Yesterday I put on a long, as I mentioned to you, which I've still actually running, so it hasn't been stopped out. Most of the other stuff, all the other longs I had, did get stopped out. It came down to try to test out as you can see, it tried to test out hitting my stop, but it didn't actually quite get there. So So we're technically in, and now we're having a bit of a rise up in Pepe. So might have some joy there. So Pepe, and then now we have ARB. Arbitrum. So it is a current short from the 9th of Jan. We've been stopped out of there. We haven't had any green candles to jump back in, so we're presently out. Or if you're shorting it, you would be currently short. There's no reason to have a close stop there just yet, but we'll see how we go. XRP. We are in the green there. There's no hesitation or any wicks down below these green candles, so there's no need to run with a really tight stop loss. Yeah, going good. It's up 1.21% in just basically just at the turnover of the hour. Wow, it's only been an hour into the new day. Anyway, so that's definitely a long. Atom is a short, so got it on a red candle there, yeah, it's really very undecided. Doge is a long. Doge is a long with a stop loss level at 33.16 cents. Optimism is a short that's starting to get breakout, but hasn't quite yet. The second last candle is still red. I wouldn't touch it. Sol is a current existing short from the 8th of Jan that would have just got stopped out right now because we brought our stop loss levels down to there. Nice. So you should be out of that trade and waiting for till tomorrow to see if that ends up being green. We'll jump back in. Otherwise, it is still a current short. BNB. We had a long there from yesterday, the day before yesterday. No, yesterday's the previous day's closed candle was that one. We've got stopped out. So BNB we're out, and we've got a second last red candle, and it is still current short too. So the indicator was right if we were just following that. Again, the indicator is dominant confluence. I call it dominant confluence. So don't argue with it. And if you're undecided, you let that sway your decision. It's like you can trump your decision, yeah. Especially when stuff crosses over too, stop loss and an indicator. It's like you wouldn't bet against that because it's actually looking at EMAs and actual real and you saw how close I made my sensitivity of my smooth Heikin-Ashi candles. Like 5 is fast, 10 is medium, 20 is just very gradual. I'm on 1, so I'm pretty much following the price because I'm in here every day. So these smooth Heikin-Ashi and Heikin-Ashi are meant for higher time frames, just so you know. So I'm adapting them to these time frames. So I'm probably the only person in the world doing this. So, but also with that comes all the risk of that I could be making a mistake. But again, we want to sort of get in here, make some money, and then we'll move into the higher time frames as we go. If you stick with me, if I can get a good rhythm going and just keep on showing you what I'm doing, I'm not going to keep on doing this if I'm losing money. I've got money to lose. I want to build, and then once we get a good rhythm going, we'll keep the things that are working, throw away the things that don't, and we'll develop a trading method. We've got a couple of pretty bespoke things that we can work on anyway to start with. So. We've got some people that are using these indicators with automation as well, and yeah, so we're building a case. We just got to make sure we stay profitable, and then we can sort of start loading up and putting extra money in and playing around with a bit of leverage too. Let's get profitable first. Is what I'm saying. Litecoin, no, don't go into Litecoin. So definitely you're in the red. Aptos is definitely in the red. The stop loss. We did go in there, but the stop loss was triggered, so we jumped out. So I moved that red. Lido, I'm not sure if I'm marking these, but probably. But anyway, Lido's in the red. Definitely do not touch Lido. Blur, definitely in the red. Don't touch. Unless you're shorting. But again, the short was back here on the 8th of Jan. Again, as these indicators change, and maybe we go to a green market, so we get a continuation of all this over a multi-day, then we'll find that we're going to be jumping in a lot of things, and then these fresh new buys, longs or shorts are going to be more relevant as far as timing to get in at a good area. we've only just started. This is day 3. Bitcoin Cash is good. It's a nice one there. I'd move the stop up to there. Let me have a look and see. I think that's one of my. No, it's not one of mine. I'm not in it. I should have been in it. Maybe must have flashed and knocked me out. But I'll probably jump back into that. WorldCoin, definitely stay out. Bad news. Or congratulations on your short if you already got one. Again, Link, stay out. Or as I say, or congratulations on your short. I'll leave that there. Ton. Ton, jeez. I want to go up, I want to go down. I want to go up, I want to go down. Okay, so basically, we've got a long indicator triggered just here on the daily. Have a look at the normal candles. What are they doing? So it's just going to do this, is it? Smaller version of this is what it's going to do. Yeah. Obviously, it thinks it's going to hang out to the upside as it had before, so we might get a bit of this action, and then come down. Let's have a look at it a little bit further, just for shits and giggles. Let's have a look at the 7-day. Okay, so it's actually been slammed down pretty hard. Bit of a pump, slam down again. someone's moving the market around there. I think a lot of traders in there. And then we've just got a doji, so on the 7-day, so that could actually pivot back up around after being smashed down quite a long way. What is that? That's smashed down 33%, and they're about 26% there. So, well, that could be a good retrace and entry, about 50% if it's going to go up. But anyway, we'll watch this. If we get, I mean, we've got a buy indicator here. I do want to see this candle green. So tomorrow, if this one stays green, great, we'll jump in. Otherwise, I'm staying out of it. DYDX is still a current short by the indicator. Actually, well, I was thinking, what the hell is going on with the candles? This is now Heikin-Ashi, alright? So it's congratulations on your short if you have been. But I wouldn't jump in there now. I'm gonna wait till. Yeah, I'll wait till I get some sort of probably a change there before jumping in. Or if you want to, you can go short and just put the stop loss. But you know, it's a really wide stop. You know, from here to here. So if you jump in and you don't have a stop loss that's a reasonable level, then it starts pumping. We are in a bull market. Just be careful. What I'm saying is be careful of your shorts. Just maybe just do the longs for the time being. And again, during this period of time, it's just it's unprecedented. Between now and January 20, I'm just a little bit concerned about it. So anyway, so that is that. And then TIA is looking good, and we've got a buy signal. And look at that. That's just beautiful. There is a little bit of a lump, little wick there. I would move the stop up if you're. I mean, we would be already in there, I'd say. No, we're not. Something must have knocked my something must have knocked me out of it. What the hell with normal candles? So let me just go back to there and go back to where I would have gotten in, which would have been there, and then change the candles. Interesting. Yeah, look, it's just off the actual out of view. I got to scroll up to see it. I might have missed it yesterday, but yeah, that's a definite buy. But I would be moving the stop loss a bit closer. $4.76 on that one. So that's basically it for the day. And yeah, good luck. And as I say, just maybe just go longs. I mean, don't expect too much. Just try and get some experience up over the next 7 days or so. Yeah, make sure you run with stops. Don't even though we're not doing leverage. I would just be careful, because there's going to be anything could happen in this, especially in this week. A lot of people are staying out of the market, so I'll give you an idea that are actually experienced. But you know, especially leverage traders and stuff like that. There's opportunity, but there's also tragedy awaits if you want to tempt fate. So let's get into a good rhythm after the 20th. But I'll keep on reporting daily anything I'm going along on, and you know, see if we can grow a little bit of our portfolio between now and after the 20th. But anyway, thanks for again, and I will see you in the next video. Remember, if you're new, just join the subscriber chat. It is down below. There's a little button you press, and then essentially you can get into our community chat. That's where I can talk to you, and you can talk to me, or start any conversation thread you want on any subject. As a subscriber, you know, because that's basically what you're paying for. That and helping me pay for my trading view and a few other things, and spending the time with you. As the subscribership grows, it just keeps us ad free as well. Again, thanks for your time, and we will see you tomorrow.